Welcome back. Now let's move on to step 5, register your business. Registering your business is a simple and necessary part of the process. This is what will make it official. Registering your business will get you a DBA, or Doing Business As, certificate, which you can use to open a business bank account and, importantly, use as proof of the start date of your business for credentials, proof of years in business to join NAPO's Golden Circle and be eligible for the CPO exam. And most importantly, proof that the business name is yours and has been yours in case someone else tries to use your business name later. I had an issue with someone starting a company called Boston Organizing. It's a little too similar to Organizing Boston, don't you think? And I sent a cease and desist using my DBA as proof that I had been in business and using my name for many years before. The other company had to rename their business. Getting a DBA is so easy. Just go to your local city or town hall, fill out a form, pay a small fee, it's usually about $50, and voila, you're officially in business. Congratulations. Step 6. Choose a business entity. When starting a business, you must decide what form of business entity to establish. Your form of business determines which income tax return forms you have to file. The most common forms of business are sole proprietor, partnership, corporation, and limited liability corporation, or LLC. Legal and tax considerations enter into selecting a business structure. If you are unsure of which to choose, talk to your accountant or attorney. You can find the forms for each of these types of businesses on your state government website. Let me give you some more information on the different types of entities. Sole proprietor. A sole proprietor is someone who owns an unincorporated business by himself or herself. This is the most common way to begin when starting a business. Most people start with this, then change to another type of entity as they grow. If you are a sole proprietor, you can use your Social Security number. However, I recommend getting a Federal Identification Number, or EIN, no matter what type of entity you choose. This is another easy one. Just go to the irs.gov, type in EIN in the search, and this will bring you to the page to apply online. It's completely free and protects you and your Social Security number from identity theft. Partnership. A partnership is a relationship existing between two or more persons who join to carry on a trade or business. Each person contributes money, property, labor, or skill and expects to share on the profits and losses of the business. Be very careful before entering a partnership. Make sure you are both providing equally to the business in skills and in time, and that you have a solid legal agreement in place beforehand should anything happen. A partnership must file an annual information return to report the income, deductions, gains, losses, etc. from its operators, but does not pay income tax. Instead, it passes through any profits or losses to its partners. Each partner includes his or her share of the partnership's income or loss on his or her tax return. Corporation. In forming a corporation, prospective shareholders exchange money, property, or both for the corporation's capital stock. A corporation generally takes the same deductions as a sole proprietorship to figure its taxable income. A corporation can also take special deductions. For federal income tax purposes, a C corporation is recognized as a separate tax-paying entity. A corporation conducts business, realizes net income or loss, pays taxes, and distributes profits to its shareholders. The profit of a corporation is taxed to the corporation when earned, and then is taxed to the shareholders when distributed as dividends. This creates a double tax. The corporation does not get a tax deduction when it distributes dividends to shareholders, and shareholders cannot deduct any loss of the corporation. Limited Liability Corporation, or LLC. An LLC is a non-corporate business whose owners actively participate in the organization's management and are protected against personal liability for the organization's debts and obligations. The limited liability company is a hybrid legal entity that has both the characteristics of a corporation and of a partnership. An LLC provides its owners with corporate-like protection against personal liability. It is, however, usually treated as a non-corporate business organization for tax purposes. If you own property or have other business interests, becoming an LLC or corporation offers important protection against your personal assets. I know that's a lot to take in, so please talk to your accountant or attorney if you are unsure which entity is right for you. Now that ends Lesson 2, so please go on to Lesson 3 to continue Business 101.